Good evening, everyone. Well, the bar was set high with the previous panel for sure, and we are going to be ensuring that all those things that were talked about, that the Indian economy is perhaps at the high point, in a sweet spot, and this is perhaps India's moment, and this is perhaps India's decade. But, at the same time, Indian sectors and also the companies, they have a lot to navigate through. Starting from political, economic, technological risks. There are a lot of risks that companies are going through. So on this panel, we are trying to understand how can companies be better prepared for such risks. So Mr. Kanabar, let me begin with you. Help our viewers and all the audiences here understand how has the risk landscape really evolved for organizations in India, and today, which are the biggest risks that companies face?
So first of all, good afternoon, everybody, and thank you, Sakshi, for having me here. It's pleasure to talk to this group. But I was just wondering, here is a group of investors. They are looking to maximize returns. Talking about risks and conservatism is the most boring thing that one can do. So let's try and see how we can make it more interesting than make it boring. So just as a background, when you talk of risks, I think Harvard Business School really did a good study, and without being too academic about it, it just put risks into three buckets. It said there are risks which are preventable which are internal to the organization, an employee going rogue, somebody acting outside the ethics, doing something unethical, non-compliance with rules and regulations, whatever else. Those are things which every organization has to and will engage in. That's one part. Second is a strategic risk, and strategic risk is, I think, what this audience understands. The previous panel was speaking about high risk, high reward. Are we staying invested? Are we for overnight, whatever? That's not something which that is what organizations discuss at a philosophical level, not something which is day to day. And the third and the most important risk, which has these days become very critical, is the environmental risk. So a political, geopolitical, a war breaking out, things which are beyond the control of the organization, how do you manage? And the way the world has become complex today in all these spheres, so we primarily talk about the first and the third category of risk. Every organization has to deal with both these risks. Internal management of preventable risk, and then we are talking about risks which are beyond the control of the organization and which need to be addressed on a day-to-day. And the way I see it is that the regulatory framework is evolving very much substantially. We have new things on technology, artificial intelligence, cyber security and threats around that. And we have also the political environment going. So organizations really need to put something of risk as a top focus. If they have to survive, they have to thrive. And then finally, we have what we call as black swan events, which is what nobody can ever predict.
Absolutely. Mr. Parekh, help us identify some of these challenges and, in this changing and fast accelerating environment where risks are changing by the day, by the month, how do companies really navigate through all of them?
Sakshi, I think just to kind of give, let's just start with 30,000 feet. Yeah. I think this is divide risk into two parts. Like I think Dinesh Bhai mentioned, I think one is the expected kind of risks. And, I think companies have fairly set procedures to kind of identify them, map them, have a strategy around it. And then, of course, combat it to the extent possible. You can't, oil goes up, it goes up. You can't, you have to prepare for it, but at the end of the day, your company may become unviable. So there are certain risks which you can't avoid, even though they may come. And the second area is kind of the black swan events. And, we've seen so many of them. We've lived through it in the last 3 years. I don't think anybody in the last 50 years could have expected COVID to...
4 countries going to war in a span of 1 year.
Yeah, every 6 months or 1 year, we've got some new war coming up, and large wars which can... So I think identifying those itself is a huge challenge. And therefore, for companies to prepare for it, there are, of course, some exceptional people who have been able to, Nassim Taleb, for instance, predicted an epidemic in the next 10 years. He said that in 2016. But identifying the extreme, the extreme events is itself very, very, very difficult, and therefore it's next to impossible to plan for it. And therefore, I think to build in the resilience for things which you cannot predict is, I think, equally important. But there's only so much you can do. So I think the first part is probably going to be 90% of your business strategy. Just kind of to take a little tangential point, because I think you have senior decision makers here. I think it's really important at the board level to have kind of a strategic direction when you're looking at risk, because whenever a regulator is looking at a board of directors' duty to the company, they will always look at, were your policies sound? Did you act reasonably? And beyond that, they don't want to penalize the company. And that goes back to the point that businesses are based on imagination. They're based on risk taking. If you kind of invest all your money in government securities, you can be the most riskless company out there. And that's why its board of directors are the only fiduciaries in the world who have a protection called the business judgment rule. That if you go ahead, make mistakes, you are not going to be liable for those mistakes, so long as you're loyal, so long as you're careful and diligent. So it's a legal principle called the business judgment rule, and that is specifically meant only for directors and not for any other fiduciary. So I think it's important to not run away from risk, but to try to, you to control the storm really when you see it.
Absolutely. Mr. Kanabar, let me come to you now and understand, are companies both domestically and internationally feeling comfortable when it comes to investing in India? Because that itself is being seen as, on a risk parameter. Of course, we have jumped the ladder when it comes to ease of doing business, but are they really confident? Because, the one thing that economists are noting these days is that while the government spending is picking up, it is the private investment that is still lagging. So is there a risk factor there?
Sakshi, your question in some sense is a contradiction, because you're talking about domestic capital expenditure and how is the world looking at India. And it is tried to say today that the world is looking upon India as a very, very bright spot. No question about it. I think every time you talk to international investors, there is such a lot of moroseness when it comes to the Chinese investments, when it comes to returns from other markets. Two things have happened in India. One is, of course, there is that level of confidence, there is that level of entrepreneurship which has come in, there is new development which is happening. For the first time, global investors are seeing that India is building to scale and not just wanting to chicken out as we reach mid-tier. So Indian companies are becoming global in size, etc., etc. To say, for example, that a 5G can locally be developed and implemented in India, the way infrastructure expenditure is happening, both on the private side as well as the government side, is huge. The challenge which I do see, you spoke about ease of doing business. India, of course, moved up several ladders, and then the index itself was cracked because it was found to contain certain inherent deficiencies. Where I see a challenge is that while there has been a considerable improvement in actual implementation of ease of business, we have a long way to go. If I may give you one statistic which indicates this. So in 2022, a study was done that which were the large MNCs which either moved out of China or did not move out of the China but took another option to go. And we identified 76 large companies which had created either moved out of China or created an alternate base. Out of that 76 companies, 26 moved to Vietnam and 6 moved to India. That just shows where we are. Now, in terms of potential, we have a huge potential. Ultimately, it all boils down to execution. Is our bureaucracy adept at what the political will is, which is absolutely a great will? Are people still taking myopic view? Is there still an overhang of enforcement directorate? So I see those as being challenging factors, and that's where, so I do get called in, for example, a very recent example, an Indian company with overseas holding listed on NASDAQ, and the board calls up to say, we need to have a session with you. Our company has received notices for reopening of tax matters. We are visited by enforcement directorate for things which we never thought was a possibility. And is this real? Are we having some real threat or no? So I think India needs to manage that threat perception. So if I had to summarize, I would say the potential is so huge and immense. As Nilesh put it, the tide is rising, all the boats. Question is, will we grab the opportunities which are our way? And that's where we need to focus on execution.
Fair enough. Mr. Parekh, now tell us and our viewers, so you've also been with SEBI, so all the companies that have listed on the exchanges, we're talking a lot about IPOs that are coming up as well. Now, some of the new age IPOs, of course, their founders are, very sound promoters. They have been in this industry for a fairly long time. They also hire people with are top notch from most, reputed organizations across the world, educational institutions across the world. They pay the top dollar to have the best management, and yet there is the issue of corporate governance that steps up. How does one manage that risk then?
That's a difficult question, because I think ultimately the pool of people is kind of our existing set of people. I mean, people ask me the same question about the judiciary. How come we have such a problem with the judiciary? Because they come from us. They've not kind of torpedoed in from some other kind of first world country. So our people come with their own kind of baggage, if you think about it. And it comes with the kind of shortcuts that we see on the road outside, people going on the wrong side. We don't need to do it, but we still do it. The same person goes to America and they never do that. They never dream of doing that. So part of it has to do with enforcement, I think, which is, of course, getting stricter and stricter by the day. But still, I think there is kind of this attitudinal problem that we have, that we think chalta hai. And I think I'll tell you what has changed really. I think 2 panels back, you had 2 proxy advisors here. That's changed the entire scenario of companies. Even the largest of companies are scared of what they're going to write. What has changed is private equity has come in and they hold promoters to account. So a lot of things. I mean, if you'd asked me the same question 10, 12 years back, I would have been cynical. I mean, that's the only word. Today, I'm not. I think we've progressed hugely over the past decade. And given the interest of India, given the ability to scale, in fact, I was looking at your magazine, and if you see the difference between the profitability of the number 1 company, which is over 70,000 crores, look at the profitability of the 500 company. It's just over 100 crores. We have a long way to go, and it's very easy for us to catch up. Vietnam shouldn't be on that list Dinesh bhai mentioned. We should definitely be there. But I think I'm very extremely hopeful that we're definitely the next place to invest.
If I could just supplement what Sandeep said, I would view governance, ESG, as really being a big opportunity. There will always be bad apples, and I think the unfortunate part about law is that the law always focuses on bad apples, and laws are meant to prevent that. But there is a huge portion of people out there who want to be compliant, and if we are able to bring that ease of business, make our regulations, one of the important good things which have happened in the recent past is decriminalization of several laws. So Companies Act had offenses which were very, very silly, non-compliance which was inadvertent, and you could go behind bars. The decriminalization has been a very, very good thing. But I do see people wanting to follow the best practices, and when you look at valuation and the multiples, it does get factored in, and you get a far, far better value. Most global investors, private equities, etc., look and value different companies with the same profitability differently, only depending on that ESG factor.
Fair enough. And, let me just shift gears and ask you, Mr. Parekh, again, on the kind of digitization that the companies are going through, businesses are going through. There is the emerging cybersecurity threat that everybody is going through. With no proper laws in the, offing as of now. Of course, things are in the process as of now. How does a company really deal with all of that? Unprecedented.
No, I think it's extremely should be extremely worrying for almost all organizations. I think, again, I sit on the board of a large private sector bank, And 92% of all transactions are happening digitally today. Nobody goes to a bank. If you actually, any of you have gone to a bank branch recently, you will see people are kind of, you'll usually see retired people there because it's a good place to meet their friends and stuff like that. Broadly, I think earlier you could, go to an ATM and loot it, right? That was the risk. Today you can go into the bank server. And, we saw what happened with the Central Bank of Bangladesh. Thieves stole $2 billion or some figure like that from the Central Bank of Bangladesh. So the scale is, instead of looting 10 lakh rupees, you can loot billions or maybe tens of billions of dollars. And, the risk has become just magnified thousands of times, really. So I think the kind of challenges, of course, many companies are up for the challenge. Many have to be, like banks. But many are not. And I think the whole concept of cybersecurity for banks, RBI mandates board members to attend a cybersecurity session every year or 2 years. So I think people are getting more aware, but I think people still don't appreciate how much bigger a risk it is with things digitalization. And I think, of course, India is kind of the leader in digital payments and all kinds of stuff which has had a virtuous, created a virtuous cycle for the economy as such.
Fair enough. Mr. Kanabar, the other form of risk is related to human capital, not just actual capital, and that is, when it comes to talent and managing human capital, which is integral to business success as well. These days, we see even top blue chip IT firms dealing with top level exits, just bunching up in a 1 year's time frame as well, as high as 10 exits for some of these companies. How does a company of that stature really manage the talent management and, of course, for family businesses, succession planning kind of risks as well?
So it's a very broad question, and probably one could speak endlessly about talent and talent retention. But if I could just put it simply, there are three parts. Are you retaining the right talent? Are you training them right? Do you have a work environment which allows people to be retained? And what are you doing about that retention? And a few things happen. One is, given the way the churn is happening, and the churn keeps on happening, one of the things you mentioned, for example, about IT and senior level exits in IT, while it's not a desirable thing, a large part of that talent moving out is because of entrepreneurship and the new opportunities which come up. And the question is, can IT companies afford that opportunity within the organization to those people who are entrepreneurial in nature? And not everybody thinks that way, because people have different mindsets and different skill sets. And how do you put those skill sets to absolute use? Second point is, really within the organization, are you walking the talk? If there is work discrimination, if there is sexual discrimination, are people empowered to speak about it openly? Is dissent sort of permitted, encouraged? Do you really allow people to think outside the box and come up with different solutions? And I think organizations need to go on reinventing themselves. Today, the youth in the workforce is enormous, and the youth is restless. There was a point of time when you waited for 20 years to prove yourself until you reach wherever. Today, people say that if we are capable, we don't want the hierarchical organization that it takes us 5 years to reach other 5 years to reach here. If we are capable, do organizations keep on reinventing themselves? The corner room in the organization is no longer restricted to those who are 50 plus. And the final point I would put is succession planning, which becomes one of the most important things for every organization. So if somebody is moving out, is there somebody else ready to move in and take that place and move further?
Fair enough. Just 1.5 minutes remaining, so I'll give one word to both of you towards the end. Tell us, how does an organization really anticipate future risks, which is a big challenge, and how to identify it and prepare well in advance? Mr. Parekh.
No, so I think it's at least in large organizations, it's a specialized role, and I don't think it should be kind of done by amateurs, really. I think there are experts who are looking at, again, it doesn't have to be just a business risk, cyber risk that we spoke of. We have legal risk, for which you should come to me, of course. So I mean, there are specialists out there who are looking at various types of risks, and you should be able to at least know that you have an issue of cyber risk. If you're not large enough, you outsource it, but at least have that courage of going out and kind of trying to get the talent, map the resources, think of executing that mapping, and finally kind of take calls, because like I said, being risk averse is probably the kind of the worst thing to do. I mean, going with your eyes open and taking risk is the name of business.
Fair enough. Mr. Kanabar, for all the tax-related risks, you have to go to Mr. Kanabar. That is the given. Apart from that.
No, let me put it slightly differently, maybe a little bit of a different perspective from what Sandeep mentioned. Far too long, risk within organization has been relegated to compliance. And it is not, compliance is of course very, very important, but that's the least of the issues. It's something which has been relegated to a department which is going to look at whether it is law, whether it is tax, whether it is finance. I think in today's date and time, the risk is something which the board needs to be concerned with, because the level of risk today is very, very different. Technology risk, obsolescence risk, war risk. How are you looking at each one of these on an ongoing basis, evaluating and responding to it in the best possible manner? It is no longer a function of those people down below doing that risk fiction day out or consulting somebody like us to provide. That may be one of the important aspects, but it's really a board level matter, and independent directors, as Sandeep rightly mentioned earlier, focusing on risk for the organization.
Well, wonderful. Thank you so much, gentlemen, for speaking to us and making all the people aware about what are the potential risks one needs to be aware of. Thank you so much for being a wonderful audience and listening very, very carefully after that intense conversation that we had. Thank you so much.
Thank you, Sakshi, for moderating that panel. Now, the next one is a session where I've got my notepad, I've got my pen, because this is a session where I'd be wanting to jot down a lot of notes, as should you, because we're going to be talking to a very special guest about the sustainable path to profit.